Joining us on the phone to talk about the markets is Dan Zwicker of ADM Grain Group. He's in Decatur, Illinois. Good morning, Dan.
Good morning, Dave.
Generally speaking, if you look at the charts, if you look at January beans in the March corn chart, it seems to me we're kind of reaching levels where you would, if you were a bull, you'd want those prices to make a stand.
Yes, we came right down to them there, especially I'm looking here at March corn futures, yesterday's low, and then we were able to kind of muster a decent close compared to what we were earlier in the session, and now here this morning we're following through on some of that little reversal that started yesterday with an advance here of 5-6 cents. So the March corn futures does look like it's kind of found a short-term low here. We're going to try to see whether or not we can maintain this short covering rally. I kind of view it more of a short covering bounce prior to Christmas week. So I kind of think if we could hold today's advance and then extend it on tomorrow, that we could maybe keep this short covering rally going a little bit on into next week, because we did have a pretty hard down there last week. So I do think the market is ripe here to try to regain maybe upwards of half anyway of what it's lost over the past 2 to 3 weeks.
If you look at the monthly chart, we've got some work to do if we're going to talk about higher prices down the road.
Well, we do, but things can change in a hurry in the current environment. I think that the first thing that we need to do here on the corn here is maybe try to finish out the week higher, and I think that's a possibility if we can maintain today's advance in tomorrow, that we'd have a little weekly reversal up on the corn, and I think that would at least set the stages anyway that maybe we could regain the upside momentum.
Does just the weekly high help that much, or because last week we on the top side we were all the way up at 421 and a quarter.
Well, yeah, but the thing that everybody's going to be watching here today and this week is that we did fall down below the 50-day moving average, which just about every Tom, Dick, and Harry watches these days as a barometer. Today now we're back bumping up against it. We dropped down underneath it. We posted 1, 2, 3 closes. Whether or not this today will be the fourth close or we'll be able to climb back above it. If we could climb back above that 50-day moving average, I think a lot of your moving average index type people, trend following people would kind of feel that was a major step in putting the brakes on this decline that we had off of this 425 double top on March corn futures, and that we're at least sideways. And I look at the bigger pattern here, the chart pattern. That's what it kind of looks like to me. Is that the corn market is trying to carve out some kind of sideways trading range here, maybe between the 370 on the downside and maybe 4.25 on the upside for a while, until we maybe get the final crop production number and stocks usage numbers and everything here in the middle part of January.
All right, let's turn our attention to soybeans, where, as you say, you look at bigger chart patterns, and although it's not a classic because usually a head and shoulder top has the top of it at a high, a contract high, not the case at now, it's kind of looking like maybe we're toying with the idea of putting a right shoulder in on this marketplace.
Well, depending upon how you want to read it, the key here, I think, on January beans is holding levels that it needs to kind of hold, and those are the previous high points that were made back in August. We made late August. We kind of made a 10.17 high, 10.18 high. Then in middle part of October, we had a 10.29 high. And yesterday's low here was like 10.19. So as long as January beans can kind of maintain some closes, I think, roughly above this 10.20 area, I think it keeps the door open for more upside, but it definitely needs to hold this area. Otherwise, I think you could probably see a quick dip down to the $10 level if this 10-20 area begins to kind of give away.
And what does your timing indicators indicate from your cycle work that we might have to get this job done to hold and maybe make a move a little higher?
Well, December's a hard month to trade. Many guys have probably heard me say that. I think the corn looks like it's kind of put in its short-term early December low. December contract's going to expire next week. So it does kind of look like, when you look at a weekly chart, the corn contract's going to look halfway decent. Beans, I think, have maybe until middle part of next week to try to turn the corner and kind of dress up its technical picture before we go into Christmas week.
Turn our attention to the dollar, where by all accounts we're making a short covering rally. Is that what we're seeing here?
Well, at least initially, you have to kind of say that what we're seeing here is kind of an end-of-the-year short covering bounce. Now, for the most part, we're still inside November ranges. The dollar index had a high in November of 76.81. We had a low here about 74.17 in November. So far, the December price action is held inside. So technicians call this an inside month. I think if we would start penetrating previous month's high, I think that would really get a lot of technicians' attention that the dollar decline off of its March high that we've had all year has come to an end, and at least the market is turning sideways and may even be setting itself up for a decent recovery rally sometime here during 2010.
Where do you want to put the point of support? Like in the others, the 50-day moving average?
Well, we did. This is what's encouraging from a technical point of view. The dollar has maintained consecutive closes above this 50-day moving average, and this first time it's done that since it turned down underneath it back in March. So yes, any kind of break in here, you'd want to, if you want to be the bull, if you want to argue a bullish position on the dollar, you'd want to have it maintain this position above the 50-day moving average.
Thank you very much, Dan.
Very well.
That's Dan Zwicker of ADM Grain Group. He is in Decatur, Illinois.